Hello everyone and welcome to my channel where I explain complex economic concepts in simple terms. Today we are going to talk about one of the most dreaded words in the world of finance, recession. What is a recession? How does it happen? What are its effects? And how can we survive it? Let's find out. What is a recession? A recession is a significant decline in economic activity that lasts for months or even years. It means that the economy is shrinking, producing fewer goods and services and employing fewer people. A recession affects businesses, consumers, investors, workers, and governments in various ways. There are different ways to measure a recession, but one of the most common ones is to look at the gross domestic product, GDP, of a country. GDP is the total value of all the goods and services produced in a country in a given period. It reflects the size and health of the economy. If GDP grows, it means the economy is expanding. If GDP falls, it means the economy is contracting. A common rule of thumb is that 2 consecutive quarters of negative GDP growth mean recession, although more complex formulas are also used. For example, in the United States, a private organization called the National Bureau of Economic Research, NBER, defines recession as a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. The NBER is considered the official arbiter of recession's start and end dates for the United States. According to the NBER, the most recent recession in the US started in February 2020 and ended in April 2020, lasting only 2 months. However, this was one of the shortest and deepest recessions in US history, caused by the unprecedented impact of the COVID-19 pandemic and the lockdown measures that followed. In other countries, such as the United Kingdom and the European Union, a recession is defined as negative economic growth for 2 consecutive quarters. According to this definition, both the UK and the EU entered into a recession in 2020 due to the pandemic. What causes a recession? A recession can be caused by various factors that reduce the overall demand for goods and services in the economy. These factors can be classified into 2 types: demand shocks and supply shocks. A demand shock is a sudden change in consumer or business spending that affects the aggregate demand for goods and services. For example, a financial crisis can cause a demand shock by reducing consumer confidence, wealth, and access to credit. This can lead to lower spending on consumption and investment, which can reduce GDP and employment. A supply shock is a sudden change in the availability or cost of inputs that affects the aggregate supply of goods and services. For example, a natural disaster or war can cause a supply shock by disrupting production, transportation, or trade. This can lead to higher prices, lower output, and lower profits. Both demand shocks and supply shocks can trigger or worsen a recession by creating a negative feedback loop between output, income, and spending. For instance, if consumers spend less due to lower income or confidence, businesses will produce less and lay off workers. This will further reduce income and spending, leading to more production cuts and job losses. What are the effects of a recession? A recession has many negative effects on various aspects of economic life. Some of these effects are unemployment. A recession reduces the demand for labor as businesses cut back on production and hiring. This leads to higher unemployment rates and lower wages for workers. Unemployment can have serious social and psychological consequences for individuals and families. Inflation. A recession can affect the general level of prices in different ways depending on its cause. A demand-driven recession can lead to lower inflation or even deflation, as prices fall due to lower demand and excess supply. A supply-driven recession can lead to higher inflation or even stagflation as prices rise due to lower supply and higher costs. Income inequality. A recession can widen the gap between rich and poor as different groups are affected differently by its impact. For example, low-income workers may suffer more from job losses or wage cuts than high-income workers who have more savings or assets. Similarly, some sectors or regions may be hit harder than others by a recession depending on their exposure to its causes. Public debt. A recession can increase the public debt of a country as governments spend more on stimulus measures or social programs to support the economy and the people. At the same time, governments may collect less revenue from taxes or fees due to lower economic activity. This can lead to higher budget deficits and debt-to-GDP ratios, which can affect the creditworthiness and borrowing costs of a country. Business failures. A recession can force many businesses to close down or go bankrupt as they face lower sales, higher costs, or reduced access to credit. This can lead to losses for owners, creditors, suppliers, and customers. It could also reduce the competitiveness and innovation of the economy. Stock market crashes. A recession can cause a sharp decline in stock prices as investors lose confidence in the prospects of companies and the economy. This can lead to losses for shareholders, pension funds, and other investors. It can also affect consumer spending and wealth through the wealth effect. What are some examples of recessions? Recessions are common occurrences in the history of economic cycles. Some of the most notable recessions in recent times are the Great Depression. This was the longest and deepest recession in modern history, lasting from 1929 to 1939. It affected most of the world and was caused by a combination of factors such as the stock market crash of 1929, bank failures, trade wars, and monetary policy mistakes. It led to massive unemployment, poverty, social unrest, and political upheaval. The oil shocks. These were two recessions caused by sudden increases in oil prices due to geopolitical events in the Middle East. The first one occurred in 1973 to 1975 after the OPEC oil embargo following the Yom Kippur War. The second one occurred in 1980 to 1982 after the Iranian Revolution and the Iran-Iraq War. Both recessions led to high inflation, low growth, and stagflation in many countries. The dot-com bubble. This was a recession caused by the burst of a speculative bubble in the technology sector in the late 1990s and early 2000s. It was fueled by excessive optimism, overvaluation, and overinvestment in internet-related companies. It led to a sharp decline in stock prices, especially for tech stocks, and a slowdown in innovation and productivity. The global financial crisis. This was a recession caused by the collapse of a housing bubble and a credit crunch in the United States and other countries in 2007 to 2009. It was triggered by subprime mortgage defaults, securitization failures, bank runs, and bailouts. It led to a global recession that affected almost every country and sector. It also sparked a sovereign debt crisis in Europe and a prolonged recovery period. How can we survive a recession? A recession can be a challenging time for everyone, but some strategies can help us cope with its effects. Some of these strategies are saving more. A recession can reduce our income or increase our expenses, so it is important to have some savings to cover any emergencies or unexpected needs. Saving more can also help us reduce our debt and improve our credit score, which can make it easier to borrow or refinance if needed. Spending less. A recession can also reduce our purchasing power or increase our costs, so it is important to spend less on non-essential items or services. Spending less can help us stretch our budget and avoid unnecessary debt or interest payments. It can also help us avoid lifestyle inflation or keep up with the Joneses. Investing wisely. A recession can create opportunities for investing in undervalued assets or sectors that may recover faster or stronger than others. Investing wisely can help us diversify our portfolio and increase our returns over time. However, investing during a recession also requires caution and research, as some assets or sectors may not recover at all or may take longer than expected. Learning new skills. A recession can affect our employability or career prospects, so it is important to learn new skills or upgrade our existing ones. Learning new skills can help us adapt to changing market conditions and demand patterns. It can also help us improve our productivity and competitiveness in a labor market. Seeking help. A recession can affect our mental and physical health as well as our social and family relationships. Seeking help from professionals, friends, family, or community groups can help us cope with stress, anxiety, depression, or other issues that may arise during a recession. Seeking help can also help us access resources or support that may be available for people affected by a recession. A recession is a significant decline in economic activity that lasts for months or even years. It is caused by various factors that reduce the demand or supply of goods and services in the economy. It has many negative effects on various aspects of economic life, such as unemployment, inflation, income inequality, public debt, business failures, and stock market crashes.